Good morning and welcome to this week's edition of Winston's Weekly, covering all things property. I am Paul Sanger, your host for today. And as always, we're talking today with Winston Sammut, the investment manager at Euree Asset Management. Winston, welcome back.
Thank you.
Now, Winston, let's start with an update on this week's property news. There have been a few results this week in the sector. How have the results looked so far and who reported?
The results have been fairly good. There's been no surprises. There's no real negative aspect in terms of the results. The big result that came out was the Goodman Group result. I can talk about that a little bit later. But all the other results, Charter Hall Education, it's now called Charter Hall Social Infrastructure, came out. They've been well received. The trend, though, is that valuations right across the sectors have fallen. So
okay.
that is a trend that was expected. I guess the extent of those falls have varied depending on which asset class you're in.
Yep.
And it's fair to say that the expectations are that there'll be some more downward valuations over the course of probably the next 3 to 6 months.
Okay, that's something investors should keep a real close eye on.
Yes.
Exactly. So let's talk a bit more about the Goodman Group. They also reported a very strong result this week. What drove this outcome for Goodman?
Goodman is actually very, very well placed. Greg Goodman has positioned Goodman and the board in a very good position. They have very low gearing. They're well prepared to take advantage of any downside that occurs, further downside. They are being fairly conservative, but I think the bit of news that was very pleasing for investors is their progress in terms of developing data centres. They've got about $12 billion of work in progress. 37% of that is really related to data centres.
Yep.
And this is a global phenomenon. They are very well positioned. They've got a land bank that is appropriate for development of data centres, and the market's taken that very positively.
That's great to hear. Now, this week we look at data points. We've had CPI out earlier this week. It's a bit of a surprise there. Unemployment numbers here in Australia, retail sales overnight in the US. What's been going on in the rate environment globally and more importantly here in Australia?
Well, the CPI numbers that came out in the US last Friday night, our time, were a little bit disappointing in terms of market expectations. In that inflation rose, not by a hell of a lot, but expectations were that the trend would see them fall a little bit. So that shook the markets. Both the Dow and the S&P that were at record highs came off quite a bit, and that spilled into our market on Monday, with the REIT market being down as a result, because bond rates went up in the US. But then a couple of days later here in Australia, we had
old news.
We had the release of the unemployment numbers, which showed an increase in the unemployment rate to above 4%. Now, this is important because it's one of those data points that the Reserve Bank is focusing on in terms of determining whether they should raise rates or cut rates effectively. And because the unemployment rate has actually gone up, the market's taken it as being a positive, in that it's unlikely that the RBA will raise rates from these levels. So it's more to do with when will they start cutting rates, even though expectations are that that's being pushed down, the calendar being pushed out.
Yeah, and fair to say that's going to be debated week in, week out for the foreseeable future. But more data points are obviously going to give us more clarity on when to expect that. Hear you loud and clear. Now, we always like a bit of speculation at Winston, and there's been considerable speculation that Andrew Roberts and Tim Gurner are in talks to merge their property construction businesses. What are your thoughts on this? Okay.
You have to remember that both Andrew Roberts and Tim Gurner are in the private space. They're not in the listed space. So that they're not making any comments about that. But it probably is a good fit. Andrew Roberts is a remnant of the Multiplex Group, where he made his fortune. So he's more into commercial type developments with some residential, whereas Tim Gurner is more in the high-end residential sector. the merging of the two groups would make a $15 billion entity, which is reasonably large.
Pretty sizable.
And it's sort of, given what's happening in the sector overall, the merging of those two different sectors and businesses would probably be a positive.
Okay, well, we'll continue to watch any further developments on that story.
Sure.
And then to finish up for everyone today, Charter Hall Retail REIT and Centura Office, I think, are scheduled to report today.
Yes.
Any insights? What do you expect to see from these two property plays?
Well, Charter Hall Retail has already come out with its announcements this morning at 9 o'clock. Again, no surprises. I guess one of the positive things is that re-leasing spreads are holding up, tenancies are holding up as well. So it's all positive from that end. I haven't seen the Centura office at this stage. I expect that to be somewhat difficult because their assets are at the lower end of the quality market. Yeah, they're not in the premium and A-grade type buildings. And that's where the danger really lies at the moment, because people are moving out of those into better suited office space. They do have a bit of vacancies around, so the thing to focus on is to see how those vacancy levels are actually stacking up.
Great insights, Winston, and we'll obviously see how the stocks open in about 45 minutes. As always, absolute pleasure to have you on today, getting those insights, and we'll be back next week with another play of Winston's Weekly. Thanks everyone for tuning in.
Thank you.